If you're losing money trading right now, this video could change everything for you. I know exactly what it feels like to check your account day in and day out and see that number going down instead of up. To feel like you're doing everything right, following all the rules, yet still watching your hard-earned money disappear. After working with thousands of traders at Bulls on Wall Street, I've identified the exact patterns that separate those who consistently make money from those who lose it. I can spot it in an instant. I'm literally the stock doctor for this. In this video, I'm gonna show you the 5 critical adjustments that transform struggling traders into profitable ones. These aren't just theoretical concepts, things born in a lab. These are the exact changes that my students implement under my supervision when they finally turn the corner to profitability. The truth about struggling traders. There are all sorts of common misconceptions on why traders lose and why they struggle. It all goes from, hey, day trading is a scam. You need a lot of money to day trade. 99% of day traders lose. There's all these common misconceptions out there, but most of them are false narratives. Of course, they're true if you're losing, but if you're doing the exact right things day in and day out, and you implement these strategies we're gonna talk about, you don't have to be one of those statistics. The real reasons that you have consistent losses comes from not having an edge. So many traders think they're losing because they don't have enough capital, or they're losing because they don't have the discipline or kind of that trading psychology. It's all hogwash. The real reason that traders consistently lose is they don't have an edge. Meaning they don't have something that's statistical and quantifiable way to extract money from the market. They don't actually have a trading process. That edge is what's going to give you all the rest of it. In my style of trading, we have audibles and processes for everything. In the morning, I trade 3 patterns: red to green, ORB, quick pullback buy. Each one of those patterns has a specific checklist that I have to go through before I take the trade. It starts with how I identify, meaning what scan I run on my TC2000 to find them, to how I specifically choose my entry, where I put my stop loss, where my first sell target is, where my second sell target is, how I size the position. There's a process for every single one of these. And that's how you build edge, through these processes. But traders, they'll just lose because they think they don't have any discipline. They think they don't have this, and you can't really quantify any of that. When you build out an edge, everything flows from there. So let's find a strategy for you and then break it down into granular detail. That's gonna give you an edge where you can start to build. So many traders are closer to profitability than they think. So many traders will give up right when they're about to turn and break through that glass wall that's been holding them back. But the key to profitability is just having an edge. You have to know what you're going to do from the second you wake up. I wake up, this is my morning routine, then this is my morning stock market routine. This is how I do my pre-market prep. This is how I mark out my levels on the indices. This is how I digest all the economic and stock news that's out there. This is how I scan for earnings, for press releases. And then this is how I narrow down all this information and all these different stocks into maybe 5 or 6 amazing ideas, then how to attack it. See, when you come down and break it down into those steps, into that level of detail, now you're going to achieve profitability. Most of you guys probably have like 70% of that already, but you're maybe not doing it in the right order, and you're not doing it consistently every day. Some days you got it, some days you just roll to the computer, turn on your Discord, and you see what everybody else is doing. But if you follow that pre-market prep right there and dig through those things, you're going to be a step ahead of the game. In trading, those small routines, they're the hinges that swing big doors. Most struggling traders are actually doing many things right. They're often just missing one or two critical elements that will completely transform their results. Critical adjustment number one, position sizing fix. Guys, the reality of proper position sizing for most people is they just buy 1,000 shares of everything. They buy $5,000 worth of everything. They buy as many contracts as they can. Whatever is in their account, they're putting it in a trade. Or they're saying, hey, I'm gonna put 10% of my account in each trade or 20% of my account in each trade. And so what most traders do is they use a static position sizing system. The key to really extracting some big results is to have a dynamic risk management system with some variability. What I mean by that is that you have to adjust your position sizes depending on risk, and then adding in a level of probability. So there's two things in trading. You have risk, and then you have probability. You're going to change your share sizes depending on how much risk you have on the trade, but then you also have to layer in how well you trade that particular setup. You could have a low risk setup, but if you just stink at that setup and your win rate's 20%, that's probably not a trade that's worth taking, even though it's low risk. And so you want to always map out risk and then probability. Easy way to just map out risk for you guys, just like a back of the napkin position sizing template. Say you want to risk $500 on the trade. If you have a $1 stop loss, you're going to have 500 shares, right? Just a simple math. If you're going to have a 50-cent stop loss, you're gonna have 1,000 shares. See where I'm getting at? If you're going to have a $2 stop loss, you're going to have 250 shares. If you're going to have a $5 stop loss, you're going to have 100 shares. So you don't need like some fancy, calculator or some paper, pencil, abacus. You can do back of the napkin calculation, and it's pretty simple. You want to risk $100 per trade, and you got a 10-cent stop loss, you can have 1,000 shares. If you have a $1 stop loss, you're going to have 100 shares. And then you just make yourself a little sticky note, a little cheat sheet, and you're going to be right there, better than 99% of the traders out there. Guys, most traders will sabotage themselves with too big of size. I've got a student of mine that I work with for the last couple years, Thayer, very similar action to this, that self-destructiveness. I bark at him every day. He always stops himself out of a trade before the bigger move. So it's not even he's sabotaging himself with big size and then taking big losses. What he's doing is he's having huge size, so the minute the stock goes down a few pennies, he's like, ah! And he gets out. And then the stock explodes and does whatever he thought it was gonna do. And this has been happening day in and day out. And then what happens though is once the losses pile up, you can't turn the foot off the gas on the size because you're like, I have to make up these losses. Now if I do things the proper way, well, I'll never get back my trades, which is just an ass backwards way of looking at it, but it just is what people do. One thing I noticed with Thayer lately, today he rode down MSTR. If you see the way MSTR opened up on that Trump pump, it faded off all day and gave back the whole gap, 15% and then some. He stayed in that trade most of the day. It opened nearly at $295 and closed down at $250. I said, damn, you never hold a trade that long. What do you got? Would you take some happy pills today? And he said, no, I sized it properly according to my risk, and so I knew that at worst I was just gonna lose a few $100, so I was able to stay in the trade and just keep riding it down because I didn't oversize. He said in the past I'd have so many shares that if I just lost $1 on the trade, it would be such a big loss that I'd have to get out. We often will do this. We just think if we have more size, that we'll make more money. But that's not the case. The more size means that you'll take and sabotage yourself for every penny. You'll start watching things tick by tick instead of letting that trade sashay in and out. An easy, just back of the napkin calculation for you is the 1% rule. You want to risk 1% of your trading account per trade. What that means is if you have a $100,000 account, you can risk $1,000 per trade. It's easy math, 1%. Why I like the 1% rules, look, you would need to lose 100 times in a row to blow up your account, which would be statistically very improbable to, if not impossible, right? Even if you're playing a game of heads and tail with the donkey, you're gonna get a few wins out of that. And look, if you're new or you're struggling, you go to 0.5% or go to 0.25%. But 1% is just some easy math. I like that. I always try to keep it real simple. If you're struggling to make money, the first place to look is your position sizing. I've seen traders go from consistent losses to consistent profits literally overnight just by fixing this one element. Critical adjustment number 2, some trade selection criteria. Guys, most traders take far too many trades. In any given day, how many premium A+ setups are there? Maybe just 1 or 2 that fit what you're trying to do, your strategy, your system. It is not dozens of trades. Most traders will just jam buttons because they're trying to make money. But what you have to understand is jamming of buttons is not what makes you money. It's waiting for that hot moment where you can pounce. Guys, today I took 3 trades, and I'm an active trader, I should say. There are days where I might take 30, 40 trades, but only if the market is red hot. Today, I took 3 trades, but each one was amazing. You know, I bought puts today on SMCI when it was around 40 bucks in our chat room. And I had a feeling this was going to fade literally all day. So I got the 39 puts and they were sub $2. And now, when that trade starts to work, I can trail that down the EMAs and really ride this thing. That was a premium setup because they had a sell the news event on it and the market itself was due for a big pullback today. Quality over quantity is going to be huge. Look, you take too much quantity, it leaves yourself open for that big mistake. I know that the more times I jam the button, the more I'm putting myself in a position to do something stupid. Look, in the end, I'm a guy, right? I'm always 1 millisecond away from doing something so self-destructive. And I don't want to put myself in that position. The longer you sit at the computer, the more buttons you click, the more likely you're there to do something stupid. Beyond that, it's tiring, the commissions add up, and you never get ahead because you've taken 1,000 trades, but maybe only 1 or 2 of them were quality, and you don't even know which ones were. So you gotta establish some strict criteria for trade selection. Meaning you've got to narrow down what patterns you trade well and what patterns, most importantly, are working in this market. For example, if you trade some breakout pattern and then you're in this current market, breakouts are not going to work. Actually, every breakout currently that's happened has been an actual short setup. If you look at a breakout like TEM, right, it breaks out the IPO highs, boom, drops down 40 points. NBIS, the AI stock darling, everybody was talking about it, right? It has earnings, it breaks out, boom, gets cut in half. You can have the best trading pattern, but you got to match it with the market, and then you've got to have really strict criteria for what's working in this market and how you trade it. You want to really think about high probability setups versus low probability setups. What's the market cycle you're in? Guys, there's only 4 market cycles. You have accumulation, run up, distribution, rundown. It's just your cycle of trading. In each one of those cycles, you're going to have patterns that work and patterns that fail. That was one of the things that held me back when I was a new trader. I just would jam my patterns in every single market cycle, and then when they stopped working, I'd be like, wow, like this pattern is busted, it doesn't work. No, it's not that it doesn't work in that cycle. So you wanna always think about what's working in this cycle. Right now, look, with the tariff news, what's happening? Gap ups get faded pretty much every day. You look at a stock like Nvidia or AMD or MSTR, Coin. Look what happens every day on these things. They gap up, they spike up in the morning, and then they fade off the rest of the day. That's the hot setup. Where 3 months ago, when those stocks gapped up, they would continue to the upside. So you want to match things to the market cycle. When you're looking at good trade versus bad trade, there's a couple things that you want to be doing. Number 1, is the pattern tight? Meaning, are you trading something that has actual some structure to it? If you're doing a breakout, you want your moving averages, right, curling up under it. That's usually a sign of a healthy stock that's going to follow through. A bad setup would be something that's loose, where it's just all over the place. Or if you're trying to, break something out that's stuck in a range, right? If you look at like a MU or Qualcomm, see, both of these stocks were stuck in the range like all year. So every time they tested the top of the range, what did they do? They failed. People thought that those were breakouts, right? Like MU, see how it was stuck under the 200-day moving average? It kept testing it, but it would just fail. Why? It wasn't an actual breakout setup. Just because it's testing resistance doesn't mean it's a breakout. It had been stuck inside a range the whole year. That's not a breakout setup. A breakout setup is when you have something that trends beautifully and then goes sideways for a period of time and then breaks out. That's a whole different ballgame. That would be something like Meta, right? Like Meta this year, look at how it trends and then it goes sideways and then it breaks out, right? That recent breakout where it went to $740, right? It came out of that breakout, but it had been after a digestion, after a big run. So that's the difference between, right, a good breakout and bad breakout. The second major shift is becoming much more selective about which trades you take. Most struggling traders are taking 10 trades when they should be taking 2. Let's talk about what legitimate trading education looks like. Real classes are live and they focus on fundamentals and risk management. It's not going to be on-demand videos. It's not going to be some weird module, and then it's not going to be FAQs or where somebody comes on and does Q&A. When I work with my students, it's in class via Zoom live, but also individually. I talk to them on the phone. We text each other. They build business plans. I look at them. I grade them. It's an interaction. It's mentor, mentee. If you can't get a hold of your teacher on a cell phone, you're not a student, you're a vendor. And that's not gonna work because this is a big game. We're in the biggest game. And so you gotta have, right, that live coaching, that mentorship. And the focus has to be on the fundamentals of the market and how everything works. And then all the different ways to trade the market. And then of course, really hammering down on that risk management. You wanna have really reasonable claims and expectations. Look, I always tell my students one thing. You show me that you can make $100 in a day, I'll show you how to get to 1,000. The hardest thing to do in trading is to learn to make consistently $100 a day. If you can do that, you're winning, we can scale it. But we gotta get to that point first. And guess what? Making $100 a day ain't so bad in the beginning. $2,000 a month. Pays for your health insurance, pays for your car, pays for your phone. It can actually make an impact on your life. And then we can scale it to 200. All right, we're doing that. Now that pays for a couple more things. Hey, now let's do 300. And we build and build and build. You wanna have also education on market structure and mechanics. My class is 60 days long for a reason, because there's a lot to learn. Market structure, trading patterns, risk management, scanning, software. It's gotta be in depth. And then of course, you need a community of verifiable, successful students, people that get it. I've had winner after winner, some of the biggest traders in our industry on YouTube, Twitter, come through this program. I have been the teacher to so many because I've got literally the world's oldest, longest running trading program. This boot camp has been going since 2008. And then of course, the key is always long-term development over quick profits. A legitimate trading educator will be honest about the difficulty, the heartache, the pain, the red wine, the Rachel McAdams movies, right? The healing that needs to be taken when you take the hits. They're gonna be honest about the difficulty and the timeline, because this is a lifelong endeavor. It's not gonna be learned in a couple weeks, right? I got a 2-month class, and then after that, we go in the simulator, and then we go and we try things small, and we learn, we build, we learn, we build. You gotta focus heavily on that risk management, mental management and risk management. So risk management is more than just using stop losses. It's about recognizing your personal pattern. What are the personal patterns that are destructive to you, right? We all have these kind of things that we do in our personal life that are a little bit self-sabotaging, a little bit self-destructive, right? We all have our own little vices, right? We all have them. And so risk management, not just in companies like, hey, you gotta use a stop loss, but hey, what are the signs on a personal side, your personal management, that, when you start to feel them inkling that start to show up in your trading. And then you have to be transparent about your own performance. I trade live in front of my students every single day. They see me hooting and hollering when I'm winning, and they see me right, pulling my hair out or what's left of it when I'm losing, right? They're with me in the trenches. So let's talk about how to succeed as a trader. Number one, you gotta have realistic expectations about your learning curve. If you're not ready to commit, let's say a year's worth of time to this, I'm talking, day in and day out, you may have some work, you may have kids, but you gotta carve out some time somewhere for yourself during every day. Whether it's 30 minutes, whether it's an hour, you've gotta have these small wins and you gotta stack them up day by day. And that's gonna take you where you need to go. You gotta have also, right, the proper position sizing. Remember the 1% risk rule. That's gonna keep you out of a lot of trouble. But then look, in the end, a little bit of education and practice goes a long way too. Having somebody that walks you through things, the good, the bad, the ugly, and somebody that you can call and cry on or celebrate with is gonna go a long way. Guys, building a sustainable edge in the market is not impossible. It just takes that daily work. You've gotta go out and really dive down into granular detail what you're trying to do and to build processes and systems around them. The path from beginner to professional, it's a long journey, but it's a worthwhile journey because what you have at the end is a career. Professional trading is about small edges applied consistently over time with strict risk management. It's not about home runs. It's about staying in the game long enough to develop real skills. So, is day trading a scam? No, but the way it's marketed often is. Real trading is a professional skill that takes time, education, and practice to develop, just like any high income skill. If you approach it with realistic expectations, some great education, and a disciplined risk management system, trading can absolutely be a legitimate path to some financial freedom and a whole lot of fun. Just be prepared to put in some real work. If you want to learn more about how we teach trading the right way at Bulls on Wall Street, click the first link in the description where I break down our educational approach and philosophy.